Okay, let's unpack this. We're diving deep today into the hyper-competitive world of card issuing. We're talking everyone from, the big banks to the more specialized non-banks issuing debit, credit, prepaid cards. And if you're in this space, you know the pressure is, well, it's intense. You've got to squeeze the most value out of every customer relationship. That's the customer lifetime value, CLTV, but also run a really tight, efficient ship.
Exactly. Yeah, it's not just about getting customers signed up. It's about nurturing those relationships for the long haul, making them profitable, and doing it efficiently. Issuers are definitely always hunting for that advantage.
Right. And the source material we're digging into for this deep dive, it's a really interesting report, actually. It's called The Best-in-Class Modern Card Issuer, How Diversity and Data Separate the Leaders from the Rest. And it seems to point towards a strategy that really defines the top players. It's surprisingly clear. And maybe not what you'd first think. It's not just about having one killer card product.
No, not at all. It really boils down to breadth. The core finding from this report, and it's a collaboration between PYM and NTS Intelligence and Visa DPS, by the way, is that a real commitment to card portfolio diversification is what separates the leaders. They're not just sticking to one type of card.
Okay. Diversification. So just offering a wider range.
Precisely. It means offering comprehensive solutions that cover debit, credit, and prepaid products.
Yeah.
The whole idea is you can meet a customer's needs across different financial situations, different life stages, all under your roof, so to speak.
And the data here, it's pretty stark when you compare how common this approach is versus how effective it seems to be. This report surveyed, 451 execs, heads of payments at U.S. issuers, banks, and non-banks. That was late last year, early this year. You probably guess most issuers cover at least, say, credit and debit.
Right. And yeah, you'd be right about that. The report found nearly 2/3 do offer two of those types. And here's the kicker, the number offering the full spectrum. Debit, credit, and prepaid. It's tiny, really small. Fewer than 1 in 10 of the issuers they surveyed.
Wow, fewer than 1 in 10 are playing the full game. And yet, okay, here's where it gets really interesting. That small group, that less than 10% offering all three card types, they're a staggering 3.5 times more likely to achieve a high CLTV. 3.5 times. That link seems incredibly strong.
It absolutely is. It's a huge difference. And if you connect the dots, it makes sense, right? Offering that full spectrum means you can serve more of a customer's, diverse financial needs over their entire time with you. Think about it. Someone might start with a debit card when they're young, maybe move to a credit card later for points or building credit, and then maybe they use a prepaid card for, budgeting, or for giving to a teenager, or for travel.
Okay, so instead of that customer having to hop over to a competitor for that different card type, the issuer who offers all three just keeps them, keeps that relationship going, and captures value at each stage.
Precisely. You deepen the relationship. And importantly, you can maximize revenue from multiple angles. It's not just about, say, the interchange fee on a credit swipe. It could be debit network fees, maybe interest income across different products, perhaps fees on prepaid card loads, or even fees for other services you build because you have that full picture of the customer across all their products with you. That's where that higher CLTV really comes from.
That makes a lot of sense. You're not just earning off single transactions on one product line. You're leveraging the whole financial relationship. Okay, but managing all that complexity, different products, different rules, technology must be absolutely crucial, yeah.
Oh, completely. The report really emphasizes this. I mean, everyone in card issuing knows data analytics is important, right? Know your customer, track behavior, all that. But the best-in-class issuers, the ones offering the full debit, credit, prepaid spectrum, they prioritize very specific kind of next-level tech capabilities.
Like what, specifically? What stands out for them?
Well, they put a heavy emphasis on things like fast processing speeds.
Yeah.
You need that for real-time decisions, personalized offers, that kind of thing. And really critically integrated consumer insights. So it's not just having separate buckets of data for debit, credit, and prepaid. No, it's about having all that information flowing together so you get a single, unified view of the customer across all their card products with you.
Right, that single view. That sounds key. It lets you see, okay, they use debit for everyday stuff, credit for big purchases, maybe prepaid for entertainment. You build a much, much richer picture than just seeing their credit card statement alone.
Exactly. And that richness, that deeper understanding, allows for much smarter marketing, better risk management, more tailored service. All those things drive that long-term value we talked about. It also means these leading issuers, they expect a lot from their tech partners, the issuer processors they work with, They need seamless back-end integration.
Seamless back-end integration, meaning that all the different systems powering debit, credit, prepaid, they all just talk to each other smoothly, no friction.
Yeah, think of it like trying to run a smart home, but your thermostat, your security cameras, and your kitchen gadgets are all from different brands that won't connect. It's clunky, inefficient. Seamless integration means your different card systems work together fluidly. The report basically lays out this combination as like the required foundation now for being best in class. You need portfolio breadth, offering credit, debit, and prepaid. You need analytical sophistication using that integrated data effectively, and you need seamless back-end integration, making the tech actually work together.
So these aren't just like nice to haves anymore for the top performers. They're the absolute core building blocks. The report's title really nails it then. The best-in-class modern card issuer, how diversity in data separate the leaders from the rest.
It really does sum it up nicely. And like we said, what truly sets these top players apart, based on the report, is how they maximize revenue because they leverage those multiple product types and understand the customer so deeply across all of them.
Okay, so just to quickly recap this deep dive for everyone listening. The data from this PYM NTS Intelligence and Visa DPS report is pretty clear. Offering a diversified portfolio credit, debit, and prepaid cards seems strongly linked to getting significantly higher customer lifetime value for card issuers. It's about meeting a wider range of customer needs over time and, crucially, using integrated data to do it smartly.
Yeah, and what's interesting to think about, too, is how this principle, well, it might apply way beyond just financial services.
That's a great final thought. Consider how this idea meeting more customer needs, using integrated insights to build those long-term relationships, how that might play out in other industries you interact with.
Right. Think about your own experiences as a customer. Are there places where you feel a company could serve you better if they just offered a bit more or connected the dots on what they know about you across different things you buy from them? Even if their main product is great, what needs are going unmet? What stands out to you as a missed opportunity for a company to deepen that relationship by offering more and integrating it all? Could be something significant there.